Hello friends, welcome to this lesson. So in today's session we are going to discuss our unit number 7 of Ie&Ifs, which is based on economic reforms. So friends, let's continue our discussion. First of all, let us see what are the topic we are going to discuss. The first topic is what is transformation. Then after we will see what is economic transformation. And then what is the economic transformation in real sector, what is the economic transformation in financial sector, and economic transformation integration with the global economy, economic reforms in India. So these are the topics we are going to discuss. So in today's session we will discuss the first three topics, and in the next session we will discuss the last two topics. So let's see the part 1 lecture of this portion. So the first point is that economic reforms refers to the deregulation or at times shrinking the size of government. So let me give you an example to make it more clear. So imagine a small town. Okay, what you do? You imagine a small town where there are strict regulation on a street vendor. Okay, so there are strict regulation on whom? On a street vendor. So the government has imposed various rule on where and when and where vendor can set up their stalls, the type of good they can sell, and the fees they have to pay. These regulations create barrier for the entrepreneur and limit consumer choice. To promote economic reform, the government decide to deregulate. What does government decide? Government decide to deregulate the street vending industry. So they remove many of the restrictions and allow vendor to operate more freely. As a result, new vendor can enter the market, offering a wide variety of products. Okay, so they are offering wide variety of products and consumer have more option to choose from. So this deregulation reduce the distortion caused by excessive government control and encourage entrepreneurship and competition. So here you can see shrinking the size of government. What does it mean? So hopefully you have understood the meaning of this deregulation. This is the first point. So you can see the definition. In this definition, the deregulation word is maintained. So I have given you example to make this concept more clear. The second point is shrinking the size of government. What does it mean? So imagine a small town. Let's take the previous example, that where there are strict regulation on a street vendor. So these regulations create barriers. So friends, to shrinking the size of government, so let me make it more clear through an example. Okay, so see, this shrinking the size of government, this is another aspect of economic reform, where government reduces its involvement in certain area to promote efficiency and reduce bureaucracy. So let's say there is a government agency responsible for issuing permit for construction project. So suppose there is a government agency which issue permit for construction. Okay, so however, this agency is known for its slow process, excessive paperwork and corruption. To address this issue, the government decided to undertake economic reform by shrinking the size of agency. So what the government does, it just shrink the size of agency. Okay, so they streamline the permit application process, implement online system and reduce the number of bureaucratic steps involved. So this leads to faster approval, less red tape and reduce opportunity for corruption. By reducing the size of government in this particular area, the reform aims to make the process more efficient and remove distortion caused by unnecessary regulation and efficiency. So you can see I have given you two examples. So in both the example, economic reforms involve reducing government regulation, restriction and bureaucracy. This allow business individual to operate more freely. It encourages competitions and innovations and reduce distortion that can hinder economic growth. Right? So by deregulating and shrinking the size of government, economic reforms aims to create a more efficient and market-oriented economy. So hopefully you have understood the meaning of this term economic reform. Now let's continue to the next paragraph. Next slide. Okay. So friends, you can see that it has been explained that the pursuit of market-oriented policy. You can see the term written here. Okay, so the pursuit of market-oriented policy that fosters private sector development. The pursuit of market-oriented policy that fosters private sector development. What does it mean? Let me talk about it. So this is statement I am talking about. So it means that the government has implemented measures to encourage the growth and involvement of private business in the economy. How it does? So this is done by creating an environment where business can thrive and compete in the market. Let's take an example. So the government may reduce regulation. Okay, so government may reduce bureaucratic hurdles for starting a business, making it easier for individual to open their own company. They may also provide incentives such as tax break. Okay, They may provide subsidies to encourage private business to invest and expand their operation. So this is called pursuit of market oriented policy that fosters private sector development. Okay, now let's come to the next point. The next point is economic reforms aimed at expanding private sector participation in India. It means that the government has introduced changes to the economic system to involve more private companies in driving the country economic growth. So government might allow foreign company. So what does government example? Let me give example. So government might allow some foreign company, okay, to invest in sector that were previously restricted to Indian companies only. Let me give you some example like retail, like telecommunication. So by doing so, the government encourages competition and bringing new technology and investment that can boost economic growth. The next point is economic reform implemented in India. Okay, so in 1991, as a result of number of economic factor, okay, so friends, the economic reform implemented in India in 1991, and it was a response to various economic problems the country was facing. So these problems include negative balance of payment. You can see there an adverse balance of payment. Okay, poor performance in the public sector, in the government-owned company, low foreign currency reserves. Okay, and large government debt, and rising price, and finally a strict condition imposed by international organization. So let me give you example to make this concept more clear. So imagine a person who has spent more money on shopping than they earn from their job. They also have a loan to repay and have very little saving. To avoid a financial crisis, they might decide to make significant changes to their spending habit, find a better paying job, and negotiate with their creditor for more favorable terms. Similarly, Indian government had to address this economic difficulty by implementing reforms to improve the country financial situation and attract international support. Now let's come to the point transformation. So friends, it has been explained that the new economic reforms refers to the new liberal policy put place in India by Indian government in 1991. So friends, what is this new neoliberal policy? This is the key term. So neoliberal policy promote free market. Okay, it promotes free market. It reduces government intervention, and and privatization of industry. So let me give you an example. So friends, think of a situation where government decide to sell off state-owned enterprise. So what government is doing? It is just selling out state-owned enterprise. So government is deciding to sell off a state-owned enterprise such as public transportation or utility company to whom? To private investor. So this allow market force to determine prices, services, and competition rather than the government controlling these aspects. Government is not controlling these aspects. The market force decides prices, services, competition. So the government may also reduce regulation and trade barrier to encourage foreign investment and promote economic growth. So these are the example of new liberal policy implemented in India in 1991. So this is regarding the transformation. Now let's come to the next point that we have. Okay, so pillars, regarding pillars. So the pillars of economic reforms changes in India were refers to as LPG. Okay, in short it is called LPG. LPG means liberalization, globalization, and privatization. So these are three aspects represent the key area of focus for government. So for example, imagine a company that has been operating in a small town for many years. So a company is there which is operating in a small town for many years. To expand and grow, the company decide to implement three major changes. It opens up its business to customer from neighboring town. So see what it does from neighboring town. Okay, so in the neighboring town, it opened up business to customer from neighboring town. This is called liberalization. This is called liberalization. The second point is and sell some of its and it start importing raw material from other countries. So raw material from another country. So this is called globalization. Lastly, privatization. It means that it sells some of its share to the outside investor. So what this company does? It sells some of its share. Okay, sell share to outside investor. So this is called privatization. So these changes are intended to bring in new opportunity, increase market reach, and attract investment. Now let's come to the next point, that policy changes were made in various area, right? So let's suppose there are strict regulation in a country that requires company to obtain multiple licenses. Okay, so there are strict regulation. So company have to obtain multiple license. Okay, to obtain multiple license and permission from the government before they can start or expand their business operation. So in an effort to boost economic growth, the government decided to simplify the licensing process. So licensing process was simplified, and it removed unnecessary restriction on private business and make it easier to foreign company to invest and trade in the country. So these policy changes create a more business friendly environment and encourage innovation and foreign exchange and foreign investment. Now let's come to the next part, that is economic transformation in the real sector. The first point is we have to study is liberalization. So what it want to see, that liberalization as a part of economic transformation aim to relax regulation. So imagine two neighboring country. Let me make this concept more clear. So suppose two neighboring country like India and China. Okay, so they have a strict regulation on importing and exporting goods between them. So suppose both have a strict regulation between importing and exporting goods between them. So these restrictions include high tariff. What type of restriction? Like high tariff is there. You know what is the meaning of this tariff? Means taxes. Okay, high tariff on imported goods and complex bureaucratic procedure for companies trying to sell their product across the border. So friends, to promote trade and economic cooperation, the government of both the country decide to reduce the tariff, simplify custom procedures, and encourage free movement of goods between the two nations. So this liberalization of trade and this liberalization of trade regulation allow business to engage in cross-border trade more easily, leading to increased opportunity and economic growth. So this is how liberalization is done. Okay, now let's come to the next part, that liberalization ensures it enables the opening of economic frontier. Okay, let me give an example to make this concept more clear. Suppose a country has a traditionally been very protective of its domestic industry. So it traditionally has been very protective of its domestic industry and limit foreign investment. However, the government realized that attracting foreign investment can bring in new technology, expertise, and job opportunity. To encourage this, they remove barriers and regulations that previously restricted foreign companies from entering in the market. As a result, international investors and multinational companies are now able to invest in and establish their business in the country, bringing it more capital and creating one. So this is about a liberalization policy we have discussed now. Now let's come to the next slide. Okay, some more points regarding liberalization. That enhance, you can see the keyword is enhanced production capacity, right? So enhanced production capacity, abolition of government industrial license, and liberty to import goods. So these are the some of the economic reforms enforced by liberalization. So let's take example. Let's say there is a manufacturing company. So let's say there is a manufacturing company that want to increase its production capacity. So what it want? It want to increase its production capacity. Okay, by expanding its factory. So under the previous system, the company would have needed to obtain various licenses and approval from the government, which could be time-consuming and costly process. However, with the implementation of liberalization, the government removed this restriction and allowed the company to expand its production capacity without going through a lengthy licensing process. Additionally, the company can now import raw material. So the company can also import raw material or components from other countries without facing significant barriers. So basically, this make it easier and more cost effective to access necessary inputs. Now let's talk about privatization. Hopefully you have understood the liberalization in detail. So I have given you sufficient example to make the concept more clear. Now let's talk about privatization. So before we beginning privatization, those friends, let me remind you that we are offering daily quizzes. Daily quizzes are being conducted on our app. So please take advantage of this daily quiz. Okay, so it is completely free. You can just log in, install our app, and start giving the daily free quiz so that you can keep your understanding level fresh. Okay, now let's see privatization. So friends, privatization refers to providing the private sector with more opportunity to oversee various sector. So let's consider an example of this related to this privatization. So let's consider a government-owned telecommunication company that have been providing phone and internet service to the public. So through privatization, the government decided to sell a portion of its share in the company to private investor. So this allow the private sector to have a stake in the company and participation in its management and decision making process. As a result, the private sector brings in new idea, investment and expertise through which they can lead to improved service and increase competition in the telecommunication industry. Now let's talk more about this privatization. So you imagine a country that has a state-owned airline company. So imagine a country that has a state-owned airline company. Okay, so the government decided to privatize the airline, selling a majority stake to the foreign airline company. So this partnership brings in foreign investment and expertise, allowing the airline to upgrade its fleet, offer new routes, and improve customer service. With increased competition from both domestic and foreign airline, the overall quality of air travel in the country improves. Then after benefiting the customer with more option and better services. Now let's see the next part regarding globalization. The last point of this particular slide. Let's see the globalization in detail. So friends, these are very important points which I am making you clear using an example, so that you can understand each concept clearly. Now globalization refers to the integration of Indian economy with the global economy. So let me give you an example. The best way to remember this thing is to take a proper example and the concept become clear to you. So let's take an example to make this concept of globalization more clear. So friends, think of a small local business. Okay, you just think of a small local business. Okay, so that has been selling its product only within its neighborhood. And with globalization, the business decide to expand its operation and start exporting its products to other countries. As a result, the business gain access to large market, new customer, and increased revenue. On the other hand, the business also face competition from foreign company that can now easier enter the local market and offer similar product. So this interconnection between the local business and the global market, this represents the globalization. And country engage in trade, investment, and cultural exchange in a global side. Now let's come to the next part that we have. Let's come to the next slide. So we have already talked about globalization. So in the financial sector, the government formed various committees. Okay, now let's talk about economic transformation in the financial sector. So in the financial sector, government formed various committees to enhance the overall performance of the banking sector and followed their recommendation. So suppose there are several issues with the functioning and regulation of banks in the country. So the government established a committee known as Chakravarti Committee on Monetary Policy. Okay, to study and make recommendation on how to improve the monetary policy framework. So please go through this committee name because very important. Fill in the blanks type question may be asked that this committee is related to whom, this committee is related to whom. Please go through this. These are very important part. So Chakravarti Committee on Monetary Policy to study and make recommendation on how to improve the monetary policy framework. Based on committee suggestion, the government may implement changes like adjusting so what are the changes the government established committee. The government may implement changes such as adjusting interest rate, regulating the money supply, or improving the central bank loan in managing the economy. So these are some suggested. So based on the committee suggestion, the government may implement changes like adjusting interest rate, regulating the money supply, improving the central bank. So this committee recommendation helps shape policy that enhance the functioning and stability of the financial sector. So this is first sector. This is the first recommendation helps shape policy that enhance the functioning and stability of the financial sector. So similarly, other committee like Narsimhan Committee on Financial Sector Reforms. Okay, so this Narsimhan Committee on Financial Sector Reforms, Padmanabhan Committee on Banking Supervision, Narsimhan Committee on Banking Sector Reform, Verma Committee on Weak Bank, R.H. Khan Committee on Harmonization of Role of FFI and banks. So it provides guidance and recommendation to address specific issue and improve the and improve the performance of the banking sector. The government uses this recommendation to implement reforms that aim to strengthen the financial sector. So now let's come to the next slide that we have. Next slide is related to the banking sector reforms. So friends, try to understand that banking sector reforms involve the implementation of various measures to improve the functioning and performance of the bank. So think of a bank that has been faced financial difficulties due to non-performing loans (NPA). So suppose there is a bank which has faced which has faced difficulties due to what? Due to this NPA, that is non-performing asset. So as a part of its banking sector reform, the bank is required to implement prudential measures such as setting aside more fund as provision to cover okay, you know, some of the prudential measures. This is called provisioning. So provisioning means setting aside more fund as provision to cover potential loan loss, and improving its risk assessment procedure. Additionally, to promote competition, the government allows new bank to enter the market, encouraging customer to have more choices and benefiting from better services and lower interest rate. So the reform also introduced institutional and legal measures like Lok Adalat, okay, the establishment of debt recovery tribunal to expedite the resolution of bad loans, and asset reconstruction company to help bank manage and recover non-performing loans. Furthermore, supervisory measures are implemented to enhance oversight of the bank and ensure the stability and compliance with regulation. Technological advancements such as introduction of online banking and mobile banking service are also part of the reform to improve efficiency and accessibility of banking services. Now let's talk about the first phase of the banking sector reform. So in this particular slide, we will discuss the first phase of banking sector reforms in detail. So what have been done in the first phase of banking sector reforms? So let's see. So friends, the point is the first phase of banking sector reforms was initiated with the appointment of Narsimhan Committee 1. Okay, so Narsimhan Committee 1 appointment. So the committee was tasked with assessing and proposing reform for the financial sector reform. So let's take an example that how it was done, so that concept become clear to you. Okay, so imagine a group of experts appointed by government to examine the functioning and issues of banking system. So this committee is known as Narsimhan Committee. It analyzes various aspects of financial system. Okay, what it does, it analyzes various aspects of financial system. So it includes including the performance of bank. Okay, so like what is the bank performance? Okay, and then after performance of the bank and asset quality, regulatory practices. So based on their finding and recommendation, the Reserve Bank of India issues new guidelines in February 1992. Okay, RBI issued new guidelines in February 1992. So these guidelines focus on income recognition. So in what is the meaning of this income recognition? So let me talk about this income recognition. You can see the word written income recognition. So income recognition means that how banks should account for their earning. The next point is asset classification. Asset classification, it means that how banks should categorize their loan based on their quality. And the last is provisioning requirement. So it means that how much money banks should set aside to cover potential loan loss. So these guidelines aim to bring more transparency, accountability and prudence to the banking sector and improve its overall scalability. So friends, this is regarding the first phase of reform, that is Narsimhan Committee 1 reform. Now let's continue our discussion and some of the important reforms that took place in 1992 let's discuss in the next slide. The first is capital adequacy norms. You know, capital adequacy refers to the amount of capital that bank must maintain in a buffer to cover potential loss. So reform in 1992 introduced stricter capital adequacy norms. So let me give you an example to make this concept of capital adequacy norm more clear. Try to understand this thing. So imagine a bank that has total loan portfolio of $100 million. This is the loan portfolio of a bank. So under the capital adequacy norm, the bank is required to maintain a certain percentage of the capital, let's say 10%, to cover any potential loan default. This means that bank need to have at least $10 million, that is 10% of $100 million as capital, to ensure it can absorb any loss from non-operating loans. So by implementing capital adequacy norms, the reforms aims to strengthen the financial health and stability of the bank. The next point is regarding progressive reduction of cash reserve ratio and statutory liquidity ratio. So basically these are the CRR and SLR are two key ratio that determine the amount of cash or liquid the asset the bank must hold as percentage of their deposit. So let's say there is a bank. Okay, let me give you an example. Let's say there is a bank that has $100 million in customer deposit. Previously the bank was required to keep, let's say, 10% of this deposit in CRR, 10% in CRR, and another 20% in SLR, amounting to $30 million, right? So you can calculate 10% and 20%, this will give you $30 million. So friends, after the reform, the CRR might be reduced to 5%. Earlier it was 10%, it might be reduced to 5%. The SLR may be increased to reduced to 15%. So allowing the bank to have more fund available for lending or investment. So this reduction in CRR and SLR ratio enable bank to have more liquidity and deploy fund for productive purpose, such as extending loan to the businesses. So this is regarding the progressive reduction of CRR and SLR. Next point is deregulation of lending rate. What does it mean? So previously the bank in India were subjected to interest rate regulation, means there will limit on the rate that they could charge for the loan. Reform in 1992 deregulated lending rate, giving bank more freedom to determine interest rate based on market condition and their own risk requirement. So let's take an example. Before the reform, the government set maximum lending rate of 10%. Banks were not allowed to charge interest rate above this limit. So however, after the deregulation, banks have the flexibility to set their own lending rate based on factors such as cost of fund, credit risk, market demand, etc. So this is all about this deregulation of lending rate. Hopefully you have understood. The next point is credit delivery. So these are the reforms, right? So these are the important reforms which were brought about in 1992. The question may be asked, the first reform. So please go through each and every point. I am making you clear using example. The next is credit delivery. So reform in 1992, it involves it focused on improving the delivery of credit to different sectors of the economy, especially to the sector that were previously undeserved. So the special focus is on sector that were previously undeserved. This is called our credit delivery system. So let me give you an example to make this concept more clear. So friends, suppose there is a small farmer who want to expand in agriculture. So suppose there is a farmer who want to expand in agriculture operation but lacks the necessary fund. As part of the credit delivery reform, banks are encouraged to extend loan to farmer at reasonable interest rate and with a simplified procedure. So this enable the farmer to access credit, invest in new equipment and inputs, and increase agriculture productivity. So by improving credit delivery, the reforms aim to support economic growth and address the financial health of various sectors. So now let's discuss the next part, that is DRT. You know the DRT is Debt Recovery Tribunal. So it is established a specialized forum to expedite the recovery of bad loan or non-performing loan. So imagine a situation where the borrower default on a loan and the bank is unable to recover the outstanding amount through regular channel. So the bank can approach the DRT and specialized court-like body to initiate legal proceeding for the recovery of the loan. The DRT has authority to enhance recovery action, such as sending the defaulter assets and or garnishing their wage. So the establishment of DRT can promote loan to. So the establishment of DRT can promote. It can provide bank with more effective mechanism for the timely resolution of bad loan. So the next point is strong supervisory system. So reform in 1992, it emphasized the establishment of a robust supervisory system to ensure effectiveness and efficiencies of the business. And the last point is entry of new private bank and merger and amalgamation. So see, reform in 1992 allowed the entry of new private bank and facilitated merger and amalgamation among banks. Okay, now let's come to the next part, that is the second phase of reforms included in the second phase of reform. So friends, the second phase of banking sector reform was led by Narsiban Committee in 1998. The first phase was 1992, the second phase was in 1998. Please remember this data. very important data. We will discuss more about this data. So it aimed to review and further improve the progress of banking sector. So imagine a group of experts including M. Narasimhan who were appointed by the government to assess the functioning and performance of the bank after the initial reform. This committee known as Narasimhan Committee 2. It conducted a comprehensive review of the banking sector and make recommendation for the make recommendation for further and it make a recommendation for further reforms based on their finding. Now the next part is deregulation of branch licensing. So previously the bank in India has to obtain a license from the regulatory authority to open new branch. The second phase of reforms involve the deregulation of branch licensing. Okay, deregulation of branch licensing, allowing bank to more freedom to open branch. So imagine there is a bank. Okay, let me give you an example. So imagine there is a bank that want to expand its presence. Okay, it want to expand its presence in different region of the country. So before the reform, the bank has to obtain permission from the regulatory authority for each new branch it wanted to open. However, with the deregulation of the branch licensing, the bank can now open branches in different locations without the need for individual license. So this flexibility allows the bank to respond more efficiently to the customer demand, establish a wider network and other banking services. The next point is prudential norms and disclosure requirement. We have already discussed this part, that the second phase of reforms introduces stricter prudential norms and disclosure requirements. The next point is low inventory. So it's regarding capital adequacy. So capital adequacy we have already discussed. Prudential reforms, capital adequacy. Capital adequacy refers to the amount of capital that bank maintain as a buffer against the potential loss. So friends, this is the part 1 lecture of this unit number 7 of Ie&Ifs. If you want such videos explanation for the next part, please install our app or WhatsApp me on this number. Number is on your screen. I will provide you the detail how to access such type of videos. Okay, with English explanation. So this is our part 1 lecture of unit number 7. And friends, if you want to give daily quiz, do install our app. The app name is JAIIB and CAIIB Made Simple. This is available on the Play Store.